single bar pullback, sharp pullback, multi-bar pullback, deep pullback, shallow pullback. It's all about trading pullbacks.
Hello traders, I am Samir Jha and this is module 30 of the online technical analysis course I teach at Simplydaytrading.com. The entire online course is over 40 modules which starts with the very basic concepts of technical analysis and cover all aspects of technical analysis which you should know as a professional trader. Through this model, I'm just trying to give you some general idea about what to expect inside the course, hoping it will help you decide whether the course will be beneficial to you or not. Let's have a quick look at what we are going to learn in this module. We are going to learn what a pullback is, the different types of pullback. We will further learn how to measure the strength of a pullback, and finally we will learn the importance of the very first pullback in a new trend and how we can trade it profitably. So, what is a pullback? When price moves at least one bar, I will repeat it again. When price moves at least one bar against the current price trend or the dominant trend direction before it resumes back, we call it a pullback. Pullback is also known as retracement, correction, or dip. You must have heard on television the experts talking. A retracement in Nifty in the near term is very likely for the bull run to continue, or Nifty is going to correct by 2% this month. Or as long as Nifty is trading above the mark of 10,000, all dips are very good buying opportunities for the long-term investors. I hope by now you understand what a pullback or correction or retracement or dip means. All means one and the same thing, right? Let's see how a pullback is formed in the market. Market moves upward from point 1 to point 2. This move represents the dominant market trend at present. Then it moves from point 2 to point 3, which is clearly against the dominant market trend, that is 1, 2. And then the market resumes back and moves from point 3 to point 4. When the leg 3, 4 breaks above the pivot 2, we say 2, 3 is a pullback. Let's see it once again. 1, 2 at present is the dominant market trend. 2, 3 moves against the leg 1, 2. Then the upward trend resumes and the market moves from point 3 to point 4. When the leg 3, 4 breaks above the pivot 2, we say 2, 3 is a pullback. If leg 3, 4 is not able to break above the pivot 2, we won't call 2, 3 a pullback. We will call 2, 3 a pullback only and only when the leg 3, 4 moves above the pivot 2. Let's have a quick glance at some candlestick charts to understand pullback. Chart 1, 2, 3 all have pullbacks. As you can see, let's analyze them individually. In chart 1, market was initially moving up, shown by the first 3 green candles. Current market trend is clearly up. Then a bearish candle was formed, the red candle. With the formation of this bearish candle, market moved a little to the downside. Then again a green candle was formed. It broke the high of the red candle and the upward trend resumed back. The red candle here represents a pullback in the uptrend. In fact, it's a 1 bar pullback. Let's see chart 2. Here also the market first moves up. The current market trend is up, or the market is in uptrend. Then it moved against the current market trend and then it resumed back. Hence, red arrow represents a pullback in this uptrending market. Let's see chart 3. Here we have a pullback in a downtrend. The market was moving initially down. Then a bullish candle was formed, the green candle. And then the market moved towards upside, which is against the dominant trend, that is the downtrend. And the downtrend resumed back. Hence, the green arrow represents a pullback in the downtrend. I hope by now you have a very clear idea of what a pullback is. So let's move to the types of pullback now. We can broadly classify the pullbacks as simple pullbacks and complex pullbacks. Let's study simple pullback first. Simple pullbacks can be further divided into single bar pullback and multi-bar pullbacks. Single bar pullback can be a sharp pullback whereas multiple bar pullback can be deep or shallow in nature. Let's study them in sequence. First, the single bar pullback. It's clear from the name itself. Single bar pullback is a pullback of single bar or candle, whatever you call. As you can see in the figure, the red bar represents single bar pullback in existing uptrend. Now, note some important characteristics of single bar pullback. First, single bar pullback are spotted frequently in strong trends and after strong breakouts from trending ranges. They provide very good entries both in uptrend and downtrend when the stock is moving with good momentum. You can buy one tick above the red bar and place your stop loss one tick below the low of this red bar. I'm not going to talk about specific levels of entries, exits and stop loss because that's not the goal of this module. I have a separate module on entries, exit and stop loss techniques, and if I start discussing it right now, I will deviate from mainstream topic, which is pullback. So let's get back to the topic. One thing very important to note here is that bar 2 was not able to break below the low of bar 1, which shows that the bullish pressure is very much dominating at the moment in this time frame. Now let's see other types of single bar pullback where low of bar 1 will be broken, and it's the sharp pullback. As you can see, it's also a single bar pullback. In sharp pullback, the body of red bar, bar number 2, is bigger than the previous bullish bar, bar number 1. Sometimes it can be very big and very quick. Note that bar 2 broke the low of bar 1. Most of the traders get scared to take long trade here. They think that the body of the bearish bar is very big, which shows strong selling pressure and the uptrend may likely reverse. Most of the time, this does not happen. We wait for the formation of bar 3 before placing any buy order. We can see in the chart, bar 3 went below the low of bar 2 and found a strong support and closed above the opening price of the red bar. This tells us that there is a strong buying pressure still intact in this uptrend. Bar 3, here is our setup bar. We can place a buy stop order one tick above its high and our stop loss will be one tick below its low. If bar 4 triggers our buy order, it's good. We will stay in the trade. And if bar 4 does not activate our buy order, we shall immediately cancel the buy order. We won't wait for the next bar to activate it. I will repeat the entire set of rules for entry once again. A bear bar is formed in a strong bull trend. It is represented by bar number 2. This bearish bar has to break the low of bar 1. We have not placed any order so far. We have to just watch how the next bar is formed, that is bar number 3. Now, if bar 3 breaks below the low of bar 2 and closes above the opening of bar 2, then only we will place a buy stop order one tick above the bar 3. And if the bar 4 does not activate our buy order, we will immediately cancel our buy order. We won't wait for bar 5 or bar 6 to activate our buy order. I hope the setup is clear. If not, rewind the video and watch it again before moving any further. Now we have studied both types of single bar pullbacks. Let's move to multi-bar pullback. I will take you back to slide number 10 for a quick recap. Now you can see we have studied single bar pullback. Now we will study multi-bar pullback, which are of two types, shallow and deep. Multi-bar pullbacks. It's very clear from the name itself. If the pullback consists of multiple bars, we call it a multi-bar pullback. It's encircled in the chart. Let's move to the first type of multi-bar pullback, that is the deep pullback. You can clearly see the pullback consists of many bars. So it's a multi-bar pullback for sure. And since the pullback has gone deep against the dominant bullish trend, we call it a deep pullback. Let's see the shallow pullback now. Shallow pullback is also a multi-bar pullback, but it has not gone deep against the dominant trend like the deep pullback. The pullback is shallow, so we call it a shallow pullback. The only difference between a deep and a shallow pullback is the depth of the pullback. If the depth is deep, we call it a deep pullback, and if it's shallow, we call it a shallow pullback. I'm very sure you must be thinking now that it's difficult to distinguish between a deep and a shallow pullback, and it's very subjective as well. But don't worry, I will give you a tool to quantify it in the next slide. We will use the Fibonacci retracement tool to differentiate between a deep and a shallow pullback by measuring the depth of the pullbacks. If the depth of the pullback is anywhere between 0 to 38.2%, we will call it a shallow pullback. Similarly, if the depth of the pullback is anywhere between 61.8 to 76.4%, we will call it a deep pullback. So now we can easily differentiate between a deep pullback and a shallow pullback by just measuring the Fibonacci retracement. We don't have to visually distinguish them. Let's see some examples. Here we have a shallow pullback after the price has traveled from point 1 to point 2. But why it's a shallow pullback? First, we measure the retracement from point 1 to point 2 and we see that the retracement is around 0.23, which is in percentage term 23%. So according to our rule, if the retracement, which is the depth of the pullback, is between 0 to 38.2%, we say it's a shallow pullback. In fact, it's just a 2-bar pullback. Just to recall, whenever the pullback has more than 1 bar, we call it a multi-bar pullback. And we are interested in measuring the depth of only multi-bar pullbacks and not single bar pullback. Now coming to the most important aspect of the shallow pullback, whenever we have a shallow pullback in an uptrend, it means bears were not enough strong to push the price deep and hence the market is more likely to resume back because of the bullish dominance. This is our trading clue to get long. You can buy when the market broke above the pivot 2 with a stop loss, with proper stop loss and proper target. I won't get into discussing the techniques for exact entry, price level, stop loss, target levels. I have a complete module on all this and I may upload it for free anytime soon, so you can consider subscribing to my YouTube channel and Facebook page. Coming back to the topic, let's see one more example of a shallow pullback in a downtrend. Price traveled from point 1 to point 2. This price swing has many consecutive bearish bars, which shows good bearish strength in the market. It's clearly a downtrend, so we will only look to sell in this market. When the price reached point 2, a multi-bar pullback started to form. We measure the retracement from point 1 to point 2 and the maximum retracement to the upside was 23%. Hence, it's a shallow pullback in downtrend, and the downtrend in place will most likely resume because the bulls were not enough strong to push the price deep. One very important thing to note in this setup is the presence of a resistance line represented by the orange color. This orange line initially worked as support here, as you can see over here, but when the price swing 1 2 broke below this orange line, it became a resistance. Now we have confluence of two setups, thus a high probability setup. Remember, trading is a game of probability. As traders, we stack probabilities in our favor. To sum up, why it's a good setup to go short? Exactly for the 3 reasons. First, we are already in a downtrend, and as per the first assumption of technical analysis, price moves in trend. A trend in motion is more likely to continue than to reverse. The second one, we have a shallow pullback, which means the downtrend will most likely resume. And the third reason is we have a resistance just near the 23% retracement level and it rejected the price twice before the first red candle in the pullback was formed. Hence, we have a confluence of factors here which makes it a high probability short setup. Personally, I always look for support or resistance as shown in the above setup before trading any pullback. It acts as a filter and keeps us out of many losing trades. I would highly recommend to trade only those multi-bar pullbacks where you have a support or resistance. If you are going long, you need a support for your pullback, and if you are going short, you need to have a resistance for your pullback as shown by the orange line in the above example. Now let's study the deep pullback. Here we have a deep pullback after the price has traveled from point 1 to point 2. But why it's a deep pullback? It's simple, because the retracement of the price swing 1 2 is something between 61.8% to 76.4%. The level of 76.4% is not plotted, but retracement would come around the level of 76.8%.
26.4%. Therefore, we call it a deep pullback. So what's special about deep pullback and how can we trade it profitably? Well, the very first thing you should understand, whenever you spot a deep pullback in the market, you should be very careful because the trend is getting weak and most likely it won't resume and a reversal is underway. And even if it resumes, it won't travel much distance after the resumption for most of the time. In short, we can say deep pullback is an early sign of trend reversal. In the above example, we have a downtrend in place which shows bearish dominance in the market until point 2. And then a deep pullback happens till point 3, which clearly shows that bulls are gaining a strength and they were successful in pushing the market deep upside. Buying interest is back in the market, hence it won't be a good idea to open new short positions. Rather, we should cover our existing short positions, if any, because the downtrend is getting weak with the deep pullback. But there is still a way we can trade most of the deep pullbacks, but not all, profitably. Let's see it on the chart.
Sell
Anywhere between the 61.8% to 76.4% retracement levels, and your target will be one tick below the pivot 2. Again, I won't go into details of entry, exit and stop loss techniques as I have told it before. What I would say, initiate the trade only and only when you get a reward to risk of at least 1.5. I will repeat it again. Initiate the trade only and only when you get a reward is to risk ratio of at least 1.5. If your deep pullback setup is not offering you that, according to your stop loss, entry and target level, don't initiate the trade in the very first place. Let it go. By now we have studied all the types of simple pullbacks. Quickly take you back to slide 10 for a quick recap. Before proceeding any further, just have a look at it. You can see by now we have understood all these pullbacks. Now we will understand the importance of the very first pullback in a new trend. The very first pullback in a new uptrend will almost always attract more buyers and the uptrend would most likely continue. Similarly, in a new downtrend, the very first pullback will almost always attract more sellers and the downtrend will most likely continue. But to increase the odds in our favor, we will only trade the first pullback if it's a shallow pullback or a one bar pullback. We won't trade if the first pullback in a new trend is a deep pullback, because if the pullback is deep, then most probably the new trend has not yet started. In the chart above, we are using moving average crossover to identify a new trend. You can use any combination. I have used 25 period EMA with 50 period EMA on a 5-minute chart. There is no magic with 25 and 50 period EMS. Consistency is the key. Whatever pair of moving averages you are using, use it consistently. Don't change it again and again. Okay, you can see here we have a crossover. The 25 period EMA is crossing the 50 period EMA from below. This tells us that a new uptrend is about to start, and then we get a pullback, and this is the first pullback in this new uptrend, and it's also a shallow pullback. I have not drawn the Fibonacci on the chart, but you can easily visualize it. So we can go long. It's a good opportunity to buy. Had this pullback been a deep pullback, we won't trade it because we are interested in only trading high probability trading setups. If you closely observe this setup, we have many more reasons to go long. We have a good gap up just before the crossover, showing a good bullish momentum. Then we have a bearish pin bar which failed to reverse the uptrend. Then you can see here we have a hammer at the end of this pullback. The hammer was not able to close below the 25 period EMA. Also, the low of the hammer touched the 50 period EMA and the price got rejected. And then the bar immediately after the hammer was a bullish bar, which managed to close above the high of the hammer and also above the 25 period EMA. All this shows bullish strength in the market and give us more reasons to go long. In trading, we always need confluence of buying and selling factors. We don't initiate a trade just by seeing a pullback or a hammer or a MACD crossover. We need confluence of factors. Also remember, the success of this setup highly depends on your target level. Don't be very greedy and put your target very far from the entry price. A good practice for getting positive expectancy aggressive in this setup would be to place your first target at 1.5 times your risk, and then you can trail your stop loss. I hope by now you have understood the importance of the very first pullback in a new trend and when to trade them and when not to trade them. Now let's look at first pullback after a breakout. Most of the times we have a pullback after a breakout, and most often than not always it will be a one bar or a shallow pullback. This gives us a very good opportunity to enter the trade. Let's study this in context on this chart. Here we have a trading range, it's enclosed in the blue box, and then we got a bearish breakout and then the first pullback. Now you know it's a one bar pullback and how to trade it. Most of the bears who could not sell on the breakout will sell on this first pullback. Also new sellers would come in scene and sell here, and the market would most likely move down. Again, having a target is the key. Remember, we are only interested in trading the first pullback after a trading range breakout, if it's a one bar pullback or a shallow pullback. I think by now you have a very fair idea about various types of simple pullbacks and how to trade them profitably. Moving to the complex pullbacks. There is nothing special about the complex pullbacks. Most of these are standard price patterns. For example, here we have a bull flag, which is also a pullback. The market moved from here to here and then a pullback before it resumed again. A bull flag in a 5-minute chart may be a single bar pullback or a shallow pullback in the 30-minute chart. Similarly, pennant is also a complex pullback, so is a descending triangle. These are all classic price patterns which you can very easily find in any technical analysis literature. So finally, this is the end of the module 30, and it's time for you to open your charts and do some practice. I hope this tutorial on trading the market pullbacks was helpful for you, and see you inside the course. Until then, take care. Bye.